Question 1. Which of the following statements accurately describes the concept of insurable interest in the context of property insurance? A. Insurable interest requires that the insured must suffer financial loss from the damage or destruction of the insured property. B. Insurable interest is a requirement that allows individuals to insure any property they wish provided they can pay the premium. C. Insurable interest is determined solely based on the market value of the property at the time the insurance policy is written. D. Insurable interest does not apply to liability insurance as it is only relevant for property coverage. Answer. A. Insurable interest requires that the insured must suffer financial loss from the damage or destruction of the insured property. Explanation. Insurable interest is a fundamental principle in insurance that ensures the insured has a legitimate interest in the property being insured. This means that the insured would suffer financial loss if the property were damaged or destroyed. According to the U2 Insurance Code and general insurance principles, without insurable interest, a contract may be considered void. Option B is incorrect as insurable interest must be established for specific property, not just any property. Option C is misleading because insurable interest is not solely determined by market value but by the financial relationship between the insured and the property. Option D is incorrect as insurable interest is also relevant in liability insurance to ensure the insured is liable for damages. Question 2. In the context of the claims process, which of the following is not a best practice for an insurance adjuster during the investigation of a claim? A. Collecting and documenting all relevant evidence, including photographs and witness statements. B. Making immediate payments to the claimant upon receiving the claim to maintain customer satisfaction. C. Conducting thorough interviews with all parties involved to ascertain facts and circumstances surrounding the claim. D. Maintaining clear and detailed records of all communications and actions taken during the claims process. Answer. B. Making immediate payments to the claimant upon receiving the claim to maintain customer satisfaction. Explanation. While it is essential to maintain customer satisfaction, making immediate payments without thorough investigation can lead to ethical and legal issues, including fraud or overpayment. Best practices in the claims process as outlined by the U2 Insurance Code emphasize the need for a comprehensive investigation before any settlement is agreed upon. Option A is crucial as proper documentation is essential for substantiating the claim. Option C is a best practice as detailed interviews help in gathering accurate information. Option D is also important as maintaining records aids in accountability and compliance with regulatory requirements. Question 3, scenario-based. Mr. Thompson has filed a claim for damages caused by a recent storm that damaged his roof. Upon investigation, you find that the roof had existing wear and tear prior to the storm. What should you do as the adjuster in this situation? A. Deny the claim entirely due to the existing wear and tear on the roof. B. Approve the claim for the full amount of the damage caused by the storm, disregarding the pre-existing conditions. C. Determine the percentage of damage that can be attributed to the storm versus the pre-existing condition and adjust the payout accordingly. D. Recommend Mr. Thompson file a separate claim for the wear and tear damages. Answer. C. Determine the percentage of damage that can be attributed to the storm versus the pre-existing condition and adjust the payout accordingly. Explanation. As an adjuster, it is your responsibility to accurately assess the extent of damage attributable to the covered event, in this case the storm. According to best practices in claims handling, you should differentiate between the damage caused by the storm and any pre-existing wear and tear to arrive at a fair settlement amount. This approach aligns with the principle of indemnity, which aims to put the insured in the same financial position post-loss as they were before without allowing for profit. Option A is incorrect because the total denial does not consider the storm's impact. Option B disregards the principle of indemnity and could lead to overpayment. Option D is inappropriate since the damage related to the storm should be evaluated under the same claim unless separate coverage applies. Question 4. Which of the following best defines the term actual cash value as it pertains to property insurance claims? A. The total cost to replace the damaged property with new property of similar kind and quality. B. The original purchase price of the property minus any depreciation. C. The fair market value of the property at the time of loss, reflecting its condition and depreciation. D. The maximum limit of liability stated in the insurance policy for any given claim. Answer. C. The fair market value of the property at the time of loss, reflecting its condition and depreciation. Explanation. Actual cash value, SCV, is calculated as the replacement cost minus depreciation, effectively representing the fair market value of the property at the time of loss. This method ensures that the insured is compensated fairly based on the condition of the property before the loss. Option: it describes replacement cost rather than ACV. Option B is partially correct as it mentions depreciation but does not clarify that ACV reflects fair market value. Option D refers to policy limits, which are different from the ACV calculation. Question 5 under the U2 Insurance Code. What is the primary purpose of the requirement for continuing education for insurance adjusters? A. To ensure adjusters are able to sell insurance products effectively. B. To keep adjusters updated on the latest developments in laws, regulations, and industry practices. C. To provide adjusters with a formal pathway to advance their career and earn higher salaries. D. To comply with the National Association of Insurance Commissioners (NAIC) recommendations. Answer: B. To keep adjusters updated on the latest developments in laws, regulations, and industry practices. Explanation: continuing education is mandated to ensure that insurance adjusters remain knowledgeable about evolving laws, regulations, and industry standards. This is essential for maintaining ethical practices and effectively handling claims. Option is incorrect because the focus of continuing education is not on sales but on regulatory compliance and knowledge. Option C, while beneficial for career advancement, is not the primary purpose of the requirement. Option D is partially correct, however. The emphasis is on state regulations rather than solely NAIC recommendations. Question 6. In an insurance policy, which of the following would typically be considered an exclusion? A. Damage caused by a fire resulting from negligence. B. Damage caused by flooding in a non-flood zone. C. Damage to personal belongings due to theft. D. Damage to a home caused by a storm covered under the policy. Answer: B. Damage caused by flooding in a non-flood zone. Explanation: exclusions in insurance policies specify certain risks or perils that are not covered by the policy. Flood damage is commonly excluded from standard property insurance policies, regardless of the flood zone designation, unless a separate flood insurance policy is purchased. Option A is incorrect, as negligence resulting in fire damage is typically covered under most homeowners policies. Option C relates to theft coverage, which is usually included, and Option D involves covered perils that would not be excluded. Question 7. When assessing a business interruption claim, which of the following factors should be considered to determine the amount of loss? A. The business owner's salary and personal expenses during the interruption period. B. The historical revenue and profit margins of the business prior to the loss. C. The total replacement cost of the physical assets of the business. D. The amount of insurance premium paid by the business owner prior to the loss. Answer: B. The historical revenue and profit margins of the business prior to the loss. Explanation: in a business interruption claim, the adjuster needs to evaluate the loss of income based on historical revenue and profit margins to ascertain the economic impact of the interruption. This information is crucial for accurately calculating compensation. Option A is incorrect because the claim focuses on business revenue rather than personal expenses. Option C is relevant for property claims, but not directly for business interruption claims. Option D is irrelevant since premium amounts do not affect loss calculation. Question 8. Which of the following statements accurately reflects the concept of subrogation in insurance? A. Subrogation allows an insured to recover damages from a third party after a claim has been paid. B. Subrogation occurs when an insurer waives the right to collect from a liable third party. C. Subrogation refers to the process of an insurer denying coverage for a claim due to policy violations. D. Subrogation enables insurers to assess risk and set premiums for policyholders. Answer: A. Subrogation allows an insured to recover damages from a third party after a claim has been paid. Explanation: subrogation is the legal right of an insurer to pursue recovery of the claim amount paid to the insured from the party responsible for the loss. This principle prevents the insured from receiving a double recovery for the same loss and allows the insurer to mitigate its loss. Option B is incorrect, as subrogation does not involve waiving rights but rather enforcing them. Option C describes a denial of coverage which is unrelated to subrogation. Option D misrepresents the purpose of subrogation, as it is not about risk assessment but about recovery. Question 9. Scenario-based MS. Garcia has filed a claim for water damage in her basement caused by a burst pipe. During your investigation, you discover that the pipe had not been properly maintained and the damage was partly due to negligence. What should you do as the adjuster regarding the claim? A. Deny the claim entirely due to MS. Garcia's negligence in maintaining the pipe. B. Approve the claim for the full amount of the water damage as it was caused by an unexpected event. C. Investigate to determine the extent of damages attributable to the negligence and adjust the claim accordingly. D. Recommend that MS. Garcia address the maintenance issue and file a claim for future damages. Answer. C. Investigate to determine the extent of damages attributable to the negligence and adjust the claim accordingly. Explanation. As an adjuster, it is essential to evaluate the cause of the damage to determine liability and ensure that the insured is compensated fairly. In this case, it is important to assess how much of the damage is directly attributable to the burst pipe, an unexpected event, versus how much resulted from the lack of maintenance, negligence. This approach aligns with the principle of indemnity, ensuring the insured is compensated only for losses covered by the policy. Option is incorrect because a total denial does not take into account the covered event. Option B ignores the role of negligence, which is relevant in determining the settlement amount. Option D does not address the current claims assessment and improperly shifts the responsibility onto MS. Garcia without a resolution. Question 10. Which of the following is an essential element that must be proven in a liability claim involving negligence? A. The defendant had a previous similar incident that resulted in liability. B. The defendant had a duty of care to the plaintiff that was breached. C. The plaintiff was aware of the risks involved in the activity. D. The plaintiff suffered financial losses as a result of the incident. Answer. B. The defendant had a duty of care to the plaintiff that was breached. Explanation. In a negligence claim, the plaintiff must demonstrate that the defendant had a legal duty to act or refrain from acting in a certain way which was breached, leading to damages. The other options do not represent essential elements of negligence. Option A may suggest a pattern of behavior but is not necessary to prove negligence. Option C, Y, relates to contributory negligence, is not required to establish the defendant's negligence. Option D, while damages are necessary, does not address the breach of duty aspect. Question 11. In UTO, what is the maximum allowable time frame for an insurance company to acknowledge receipt of a claim after it has been filed? A. 10 days. B. 15 days. C. 30 days. D. 45 days. Answer A. 10 days. Explanation. Under UTA law, specifically outlined in the UTA Insurance Code, insurers are required to acknowledge receipt of a claim within 10 days of receiving it. This requirement is part of fair claims settlement practices to ensure timely communication between insurers and policyholders. Options B, C, and D are incorrect time frames as they exceed the statutory limit established for claim acknowledgement. Question 12. Which of the following would be an example of an insurable interest in a property insurance policy? A. A neighbor's house that you admire. B. A car that you are considering purchasing in the future. C. A rental property you own. D. A family heirloom that is currently stored in a relative's house. Answer. C. A rental property you own. Explanation. Insurable interest refers to the requirement that the policyholder must stand to suffer a financial loss if the insured property is damaged. Owning a rental property directly establishes insurable interest as the policyholder would incur financial losses from damage. Option is incorrect because admiration does not create a financial stake. Option B is speculative and does not establish a current insurable interest. Option D involves property that is not owned, hence does not provide insurable interest. Question 13. What is the primary objective of loss evaluation in the claims process? A. To determine whether the claim is fraudulent. B. To establish the total amount of compensation to be paid to the insured. C. To calculate the insurance premium for future policies. D. To negotiate settlements with third parties involved in the claim. Answer. B. To establish the total amount of compensation to be paid to the insured. Explanation. The primary goal of loss evaluation is to accurately determine the financial impact of a covered loss, which guides the compensation amount. This process is crucial for ensuring that the insured is fairly reimbursed based on policy terms. Option A pertains to fraud detection, which is a separate process. Option C relates to underwriting rather than loss evaluation. Option D involves negotiation but is not the central aim of loss evaluation. Question 14. If an insured person fails to disclose a significant pre-existing condition when applying for health insurance, what is the likely consequence? A. The insurer must honor the policy despite the omission. B. The insurer may deny future claims related to the condition. C. The insured can claim full benefits under the policy immediately. D. The insurer has the right to terminate the policy without notice. Answer: B. The insurer may deny future claims related to that condition. Explanation: non-disclosure of a significant pre-existing condition can result in the insurer denying claims related to that condition, as it violates the principle of utmost good faith required in insurance contracts. This principle holds that both parties must be honest and transparent. Option is incorrect, as the insurer is not obliged to honor a policy based on undisclosed risks. Option C is misleading, as immediate benefits may not apply without full disclosure. Option D is overly harsh. A termination typically requires a different process and is not automatic for non-disclosure. Question 15. Which of the following statements about umbrella insurance policies is true? A. Umbrella policies provide coverage for all types of personal property losses. B. Umbrella policies only cover liability claims exceeding underlying policy limits. C. Umbrella policies are mandatory for all homeowners in Utah. D. Umbrella policies eliminate the need for primary liability coverage. Answer: B. Umbrella policies only cover liability claims exceeding underlying policy limits. Explanation: umbrella insurance is designed to provide additional liability coverage above and beyond the limits of primary policies such as homeowners or auto insurance. This type of policy fills gaps in coverage but does not replace primary liability insurance. Option is incorrect, as umbrella policies specifically address liability rather than property losses. Option C is false, as umbrella coverage is optional, not mandatory. Option D is misleading, since umbrella insurance complements but does not eliminate the need for primary coverage. Question 16. In the context of property insurance, what does the term replacement cost refer to? A. The original purchase price of an asset regardless of depreciation. B. The cost to repair or replace damaged property with new property of similar kind and quality without considering depreciation. C. The current market value of the property at the time of loss. D. The amount paid by the insured in premiums before any claims are made. Answer: B. The cost to repair or replace damaged property with new property of similar kind and quality without considering depreciation. Explanation: replacement cost coverage refers to the amount needed to replace or repair property with new materials or property of similar type and quality without deducting for depreciation. This coverage ensures the insured can restore their property to its pre-loss condition without a financial loss due to depreciation. Option A is incorrect, as it does not factor in current costs. Option C describes actual cash value, not replacement cost. Option D is irrelevant to the definition of replacement cost. Question 17. Which principle requires that the insured must act in good faith and provide accurate information when filing a claim? A. Principle of utmost good faith. B. Principle of insurable interest. C. Principle of indemnity. D. Principle of subrogation. Answer: A. Principle of utmost good faith. Explanation: the principle of utmost good faith, ubirmi fide, obligates both parties to an insurance contract to act honestly and disclose all material facts. This principle is crucial during the claims process to prevent fraud and ensure that both the insurer and the insured are treated fairly. Option B relates to having a legitimate stake in the insured property. Option C deals with compensation principles, while Option D pertains to the insurer's right to seek recovery from third parties after paying a claim. The adjuster is evaluating a claim for damages caused by a fallen tree during a storm. The insured's property was damaged, but the tree belonged to a neighbor. What should the adjuster consider in determining liability? A. Whether the tree was healthy or had any visible defects prior to the storm. B. The total value of damages caused to the insured property. C. The insurance coverage limits of the neighbor's policy. D. The insured's responsibility for maintaining the property. Answer A. Whether the tree was healthy or had any visible defects prior to the storm. Explanation: determining liability involves assessing whether the neighbor was negligent in maintaining the tree. If the tree was healthy and fell due to natural causes, the storm, the neighbor may not be held liable. However, if the tree had known defects, the neighbor could be responsible for the damages. Option B is relevant but does not address liability. Option C pertains to the neighbor's policy but does not directly impact liability. Option D, while it may affect the insured's own responsibilities, does not determine the neighbor's liability in this case. Question 19. What is the primary purpose of the National Association of Insurance Commissioners, NAIC, in relation to insurance regulations? A. To set minimum standards for the underwriting of insurance policies. B. To coordinate state regulation and develop model laws for the insurance industry. C. To provide insurance directly to consumers across the United States. D. To promote insurance companies' interests at the federal level. Answer: B. To coordinate state regulation and develop model laws for the insurance industry. Explanation: the NAIC is an organization of state insurance regulators that works to establish standards and best practices, provide regulatory assistance, and develop model laws to promote consistency across state lines. It does not directly underwrite insurance, nor does it advocate solely for insurers. Option: inaccurately represents the NAIC's role. While it influences standards, it does not set underwriting rules. Option C is incorrect, as the NAIC does not sell insurance. Option D mischaracterizes the organization's purpose, which is regulatory, not lobbying. Question 20. In Utah, if an insurance adjuster discovers evidence of potential fraud during the claims investigation, what is the most appropriate action to take? A. Immediately deny the claim based on the suspicion of fraud. B. Report the findings to the appropriate authorities and follow company protocols for handling suspected fraud. C. Ignore the evidence and process the claim normally. D. Discuss the suspicion with the insured to gather more information. Answer: B. Report the findings to the appropriate authorities and follow company protocols for handling suspected fraud. Explanation: when an adjuster suspects fraud, they must adhere to the ethical and legal standards by reporting their findings to the appropriate authorities, which may include their company's fraud investigation unit or state insurance regulators. Following company protocols ensures that the investigation is handled properly and that all evidence is documented for potential legal action. Option is inappropriate because a claim cannot be denied solely based on suspicion without a thorough investigation. Option C is unethical, as ignoring evidence of fraud can lead to legal repercussions for both the insurer and the adjuster. Option D is also not advisable. Discussing suspicions directly with the insured could compromise the investigation and may alert the insured to the inquiry, potentially allowing for the destruction of evidence. Question 21. What is the main difference between actual cash value (ACV) and replacement cost coverage in property insurance? A. ACV includes depreciation, while replacement cost does not. B. Replacement cost covers only personal property, while ACV covers real property. C. ACV is a type of liability coverage, while replacement cost is property coverage. D. There is no difference, so they are interchangeable terms. Answer A. ACV includes depreciation, while replacement cost does not. Explanation: actual cash value (ACV) calculates the value of an insured item by considering its replacement cost minus depreciation, reflecting the item's current worth. In contrast, replacement cost coverage allows for the repair or replacement of damaged property without deducting for depreciation, providing a potentially higher payout. Option B incorrectly distinguishes between types of property. Both ACV and replacement cost can apply to both personal and real property. Option C misclassifies the types of coverage. Option D is incorrect, as there are distinct differences between ACV and replacement cost. Question 22. In Utah, if an insurer fails to settle a claim within a reasonable time frame, what is one potential consequence for the insurer? A. The insured can file a complaint with the NAIC. B. The insurer can sue the insurer for breach of contract. C. The insurer automatically loses their license to operate. D. The insured cannot take any action. Answer: B. The insurer can sue the insurer for breach of contract. Explanation: if an insurer does not settle a claim in a reasonable amount of time, the insured may have grounds to sue for breach of contract. This action could seek damages resulting from the delay. While filing a complaint with the NAIC, Option A is possible. It does not provide direct compensation. Option C is not automatically true. Losing a license would require a more serious violation. Option D is incorrect, as the insured has rights and avenues for recourse. Question 23. What is a key benefit of having an umbrella insurance policy? A. It eliminates all deductibles for primary policies. B. It provides broader coverage for claims that exceed the limits of primary insurance policies. C. It is mandatory for all property owners. D. It specifically covers only business liabilities. Answer: B. It provides broader coverage for claims that exceed the limits of primary insurance policies. Explanation: umbrella insurance serves as an additional layer of liability coverage that kicks in once the limits of underlying policies like auto or homeowners insurance have been exhausted. This can cover various types of claims, providing more comprehensive protection. Option is misleading. While umbrella policies may cover certain scenarios, they do not eliminate deductibles for underlying policies. Option C is incorrect. Umbrella policies are optional. Option D misrepresents the coverage type, as umbrella insurance is available for personal as well as business liabilities. Question 24. Which type of coverage would typically provide protection against losses from claims of bodily injury and property damage arising from the insured's operations? A. General liability insurance. B. Professional liability insurance. C. Property insurance. D. Workers' compensation insurance. Answer A. General liability insurance. Explanation. General liability insurance is designed to protect businesses against claims of bodily injury or property damage that occur as a result of their operations or products. It covers legal fees and any settlements or judgments. Professional liability insurance, option B, pertains to claims arising from professional services or advice. Property insurance, option C, protects physical assets but does not cover liabilities. Workers' compensation insurance, option D, provides benefits to employees injured on the job but does not cover liability claims from third parties. Question 25. What does the term deductible mean in an insurance policy? A. The total amount an insurer will pay for a covered loss. B. The amount the insured must pay out of pocket before the insurer covers the claim. C. A fee paid to the insurance agent for policy service. D. The portion of a premium that goes toward administrative costs. Answer B. The amount the insured must pay out of pocket before the insurer covers the claim. Explanation. A deductible is the specified amount that the insured must pay before the insurance company begins to pay for a covered loss. This mechanism helps to reduce the number of small claims and keeps premiums more affordable. Option A describes the coverage limit rather than a deductible. Option C is incorrect, as fees for agents are separate from deductibles. Option D also misrepresents the concept, as administrative costs are not directly related to deductibles. Question 26. Under what circumstance might an insurer choose to rescind a policy? A. The insured has made a large claim. B. The insured failed to pay the premium on time. C. The insured provided false information on the application. D. The insured changed their address. Answer C. The insurer provided false information on the application. Explanation. An insurer can rescind a policy if they discover that the insured provided false information or misrepresented facts during the application process, which would have influenced the insurer's decision to issue the policy. Option. It does not typically warrant rescission, and claims alone do not cause a policy to be cancelled. Option B may lead to a lapse but not necessarily rescission. Option D, changing an address, usually does not affect policy validity unless it impacts risk assessment. Question 27. In a property insurance policy, what does coinsurance typically refer to? A. A policy that covers two different types of risks. B. A shared coverage agreement between two insurers. C. A requirement that the insured maintain a certain level of coverage relative to the value of the property. D. An option to purchase additional coverage at a low premium. Answer C. A requirement that the insured maintain a certain level of coverage relative to the value of the property. Explanation. Coinsurance is a provision that requires the insured to carry a minimum percentage of insurance coverage relative to the property's value. If the insured does not meet this requirement, they may face a penalty in the event of a claim. Option A inaccurately describes coinsurance. Option B refers to reinsurance rather than coinsurance. Option D is misleading, as coinsurance is not an optional purchase but rather a requirement tied to maintaining adequate coverage. Question 28. What is the primary function of an insurance underwriter? A. To settle claims filed by policyholders. B. To assess risk and determine appropriate premiums for insurance policies. C. To sell insurance policies directly to consumers. D. To provide legal advice regarding insurance contracts. Answer B. To assess risk and determine appropriate premiums for insurance policies. Explanation. An insurance underwriter evaluates the risks associated with insuring individuals or properties and decides whether to approve coverage and at what premium. They analyze various factors, including the insured's history and the nature of the coverage requested. Option A refers to claims adjusters, not underwriters. Option C is inaccurate, as sales are typically handled by agents or brokers. Option D mischaracterizes the role. Underwriters do not provide legal advice but focus on risk assessment. Question 29. If a homeowner's insurance policy includes an exclusion for flood damage, what does this mean for the policyholder? A. The policyholder will be reimbursed for flood damage under any circumstance. B. The policyholder must purchase separate flood insurance to cover such events. C. The policyholder is entitled to compensation for minor water damage from flooding. D. The policyholder's mortgage lender cannot require flood insurance. Answer: B. The policyholder must purchase separate flood insurance to cover such events. Explanation: an exclusion for flood damage means that any losses incurred from flooding are not covered under the standard homeowners policy. Homeowners seeking coverage for flood-related damages must obtain a separate flood insurance policy, often through the National Flood Insurance Program (NFIP) or private insurers. Option A is incorrect as exclusions deny coverage. Option C misrepresents the nature of the exclusion, and option D is misleading since lenders often require flood insurance in high-risk areas. Question 30. Which of the following is typically not covered under the standard homeowners insurance policy? A. Theft of personal property. B. Damage caused by an earthquake. C. Liability for bodily injury to others on the insured's property. D. Damage from a fire. Answer: B. Damage caused by an earthquake. Explanation: a standard homeowners insurance policy usually does not cover damage from earthquakes, which is considered a separate risk. Homeowners in areas prone to earthquakes typically need to purchase additional earthquake coverage. Options A, C, and D are generally covered under standard homeowners policies, which provide protection for theft, liability, and fire damage, respectively.